Hey friends, welcome back to the channel. I'm Iggy, and usually we're diving deep into long-term strategies. But today, we're reacting to something that just hit the headlines and could impact your portfolio right here in Singapore. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. If you want to stay ahead of these rapid market movements, stick around and learn how our premium members get my immediate take on everything. Prime Minister Lawrence Wong just completed his first official visit to China as PM, and this is massive for Singapore investors. Wong chose China as his first destination outside ASEAN, meeting President Xi Jinping and Premier Li Qiang in Beijing. The timing is perfect for marking 35 years of Singapore-China diplomatic relations. But here's what caught my attention from the meetings. Xi Jinping emphasized that Singapore and China should work together to address global challenges and bring more benefits to both countries. This isn't just diplomatic talk. With the global trade uncertainty and complex economic landscapes, both leaders agreed on maintaining open and inclusive trade as a key driver of growth. What does this mean for Singapore investors? 4 key takeaways that could impact your portfolio right now. First, our trade relationship with China just got stronger institutional backing. Both leaders welcome positive momentum in bilateral cooperation, especially in emerging areas like digital and green economies. Think about SGX-listed tech stocks and clean energy plays. Singapore's Green Plan 2030 targets 2 GW of solar capacity by 2030, and China cooperation could accelerate this. Second, the Belt and Road Initiative got renewed focus with concrete outcomes. She specifically called for promoting Belt and Road cooperation and creating landmark achievements in digital economy, green development, and artificial intelligence. The new international land-sea trade corridor connecting Western China to 119 countries through Singapore as a dual hub is expanding. This means more opportunities for Singapore companies with China exposure. Third, and this is crucial for your portfolio, both countries doubled down on multilateral trading systems. Wong told Xi that Singapore-China ties are more important than before amid global turbulence. They discussed the growing complexity of the global economic landscape and reaffirmed support for rules-based multilateral trading systems. That's bullish for our logistics, shipping, and financial services sectors. Fourth, there's immediate policy impact. The China-Singapore FTA further upgrade protocol that took effect December 31st, 2024 is now being actively implemented. Singapore businesses get greater market access to China through a shorter negative list, and Singapore investors are no longer subject to foreign equity limits across 22 sectors. This is happening right now. Wong also attended Summer Davos in Tianjin, emphasizing Singapore's role in global economic discussions. The theme, entrepreneurship for a new era, aligns perfectly with Singapore's positioning as a regional innovation hub. Here's what's really interesting about the economic substance. Both countries are expanding cooperation in 14 new projects spanning e-commerce, cross-border data exchange, fintech, and green tech under the Singapore-China Smart City Initiative. These aren't just announcements, they're active projects with funding and timelines. The upgraded China-ASEAN FTA version 3.0 that both countries support is set to be signed before end of 2025. This introduces 9 new chapters covering digital economy, green economy, and supply chain connectivity. For Singapore investors, this means our role as ASEAN's gateway to China becomes even more valuable. Let's talk numbers that matter to your portfolio. Singapore's freight and logistics market is valued at $67.22 million in 2025, with a projected 4% compound annual growth rate through 2033. China-Singapore trade cooperation directly benefits this sector. Our port handled record volumes in 2024 and is increasing capacity in 2025. For specific stock implications, look at Singapore blue chips with China exposure. Singapore Technologies Engineering reported 11.6% revenue growth in 2024 to 11.3 billion Singapore dollars, with strong order books of 29.8 billion Singapore dollars. Singtel's underlying net profit increased 11%, with strong performance across divisions. These companies benefit from stronger Singapore-China ties. Wong also reaffirmed Singapore's One China policy in opposition to Taiwan independence during his meeting with Xi. This political stability is crucial for continued economic cooperation and investor confidence. Here's my immediate take on Wong's China visit. This isn't just about diplomacy. It's about economic positioning in a fragmented world. Singapore is successfully hedging between superpowers while deepening economic partnerships where it matters most. The concrete outcomes from FTA upgrades to smart city projects to Belt and Road cooperation create real investment opportunities. The emphasis on digital and green economies aligns perfectly with Singapore's transformation strategy. Our clean energy roadmap targets reducing natural gas reliance from 95% to 50% by 2035. China cooperation accelerates this transition and creates opportunities in renewable energy, green finance, and sustainable technology sectors. But here's the reality check. We're navigating between two superpowers in an increasingly complex world. Wong's message about multilateralism isn't just diplomatic language. It's survival strategy for a trade-dependent economy. The good news? Singapore continues proving we can maintain strong relationships with both East and West while benefiting economically. What's particularly exciting for investors is the timing. With global supply chains still recovering and trade routes shifting, Singapore's strategic position becomes even more valuable. The new cooperation agreements aren't just paper promises. They're backed by real money and real timelines. Think about the ripple effects. When Singapore strengthens ties with China, it doesn't just benefit our direct trade. It positions us as the preferred hub for multinational companies wanting access to both markets. That's why our real estate investment trusts, focusing on logistics and industrial properties, could see sustained demand. The green technology cooperation is especially interesting. China is the world's largest manufacturer of solar panels and batteries. Singapore is positioning itself as the regional hub for green finance and sustainable technology. When these two strengths combine, we get opportunities in everything from clean energy infrastructure to carbon trading platforms. For retail investors, this means looking beyond just the obvious plays. Yes, shipping and logistics stocks benefit, but also consider Singapore companies in the digital payment space, cloud computing, and even education technology. The cooperation agreement specifically mentioned these sectors. Wong's visit also reinforced something crucial. Singapore's foreign policy isn't about choosing sides. It's about creating value for all parties. This pragmatic approach has served us well for decades, and it's exactly what investors want to see in uncertain times. The market reaction has been positive but measured. Singapore stocks with China exposure saw modest gains, but the real impact will unfold over months and quarters as these cooperation agreements translate into actual business deals and revenue growth. So that's my immediate take on Wong's historic China visit. In today's fast-moving market, staying on top of breaking news with solid analysis is absolutely critical. If you found this quick breakdown helpful and want to get my real-time reactions and urgent insights on major market shifts every single day, delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $1 a month, less than a cup of coffee. Think of it as your daily dose of market agility directly from my desk. Ready to stay ahead? Just click the link in the description below to become a member. For deeper context on Singapore's economic strategy and how we've navigated global challenges before, check out our previous video, Singapore's Trade Strategy Lessons for Global Investors, where we explored how our nation became a regional powerhouse through strategic partnerships.